Hi, I'm Llanes with WealthNet Investments. Today I want to talk a little bit about a situation I've been thinking about a lot. I was going to the doctor to do my checkup and getting ready to do that, and I was kind of just thinking through, what I wanted to do with my doctor because I'm changing providers. We have a new insurance company that my company has put in place, and that is requiring us to kind of look at our doctors again. So I was going through and thinking about the criteria, and it just so happens one of our clients is actually a former employee of the insurance company that we work with now. So I was getting some advice, and I started thinking about the criteria that I wanted to think about for, who I wanted to work with to be my primary care physician. And it really struck me how similar the investment advice and financial planning industry is to the medical field in terms of being a doctor. And I started thinking about, some of the influences that are involved in our industry. And I thought, well, if I had a doctor, just hypothetically, if I had a doctor who had a bunch of pharmaceutical reps that came to talk to him, and he was highly influenced by those pharmaceutical reps based on their products, and somehow he was being paid by these pharmaceutical companies, would I trust that doctor's advice? And then I thought, well, probably not. And then I thought about other situations. What if I had a doctor who was an internal medicine doctor, that was his discipline, and he saw everything in terms of that one specialty, and that's all he cared about. So his entire recommendation to me and my health was related to what he knew as an internal medicine surgeon, for example. Well, that didn't make sense to me either. I probably wouldn't trust his advice, that doctor's advice, because, it's almost like if the only toolkit that you had in your tool belt was a hammer, everything is a nail. And it struck me how our industry is really designed like that, and in many ways, not in all ways, but in a lot of ways. And because what got me thinking about this is in talking to people who are looking for advice and looking at their current situation, I see that quite a bit where those two things are kind of in the way. So the situation is that we have biased advice that's happening, right? We have proprietary products that are being pushed. And let me give you a quick story. So those of you who know me might know that I was a investment manager for a large bank. And that large bank had let's just say there was some things that really motivated me to start an independent registered investment advisory firm. And let me tell you a quick story. So it was the year end, or close to the year end, and they were getting ready to do the next year plan, and they had a scorecarding methodology for compensation. So I get this scorecard, and I'm looking at the scorecard, and basically what it says, okay, this is what's important to achieve in the next 12 months, and that's gonna affect your bonus. And, I would think that investment performance would be top of the list, client satisfaction, good service, things like that. And I worked in a team environment as a portfolio manager. Well, I look at the scorecard, and what do you think was at the top of the list? It just so happens that this firm, very big firm, billions and billions of dollars, had proprietary hedge funds that were involved. And they wanted us to make sure that we put a certain dollar amount and allocated certain dollar amounts into these hedge funds. And I'm thinking, wait a minute, is that really what we should be doing? Well, first of all, the hedge fund, in my opinion, was okay, but it wasn't like best of breed. So that was really the last straw for me. And I said, you know what, I can't do this anymore. I'm going to start WealthNet Investments, and we're going to have independent, unbiased advice to provide best of breed solutions. So, and why am I bringing this up? Because we see this situation happening a lot today, and we see that there are people need and want advice. There are a zillion options out there. Commissions are down to zero now. Our clients aren't paying any commission on our trades. So it really boils down to what are we doing for our clients to add value from a planning perspective as well as the investment management perspective. And are you working with a firm that is where the company, like our company, we're independent registered investment advisor. We have no proprietary products, no axe to grind. We're looking for best of breed. We go directly to the market, right? So one of the things that I've seen in the industry is that too many advisors are focused in on the narrative and not on the numbers. So, and not on the results. So to us, independent, unbiased advice means you're looking at a disciplined way of making selections. So, and that goes across the board. And you're also looking in a holistic way. So not like that internal medicine guy who's just looking at one situation. Look holistically. So for that reason, I built WealthNet Investments to have a large, broad spectrum that looks at the whole picture and then provide the advice. Not just saying, okay, here's my hammer, that's a nail, and I'm going to hit the nail. So in implementing a solution, an optimal solution, you've got to have those elements. Independent, unbiased advice. You don't want to be that doctor who's influenced by pharmaceutical companies. You don't want to be that doctor who only sees one solution. So in order to get good and unbiased advice, it requires that. But it also requires more than that. It requires experience, proven experience, and an understanding of how the markets really work. So one of the things I'm really proud of at WealthNet is we've got people who have been through, including myself, who have been proven, who have worked through very bad, big bear markets. For example, we had a huge bear market in March of 2000, right? We had the dot-com bubble. And we've been able to help people who've retired during that period of time where the S&P 500 and the stock market literally did nothing, was underwater for 11 years plus. But yet we earn returns. So now a lot of advisors are green in the industry these days. That's one of the things that we've noticed is there's a lot of young people. Nothing wrong with that. That's great. But not having the experience and the understanding and the processes, and things are too cookie cutter now. People are just putting cookie cutter portfolios together based on technology. Technology is all great, and we use the best technology. We use top-notch technology for our financial planning software, for our trading, and for our investment management research process. That's all important. But there's another thing. Each person, each individual is a human being. They're not a number. So things need to be tailored, and that requires expertise, and it requires an understanding of how to adapt to markets. So you can look at anything from a backtest standpoint, look at those numbers, and it's important to do that. But what's really creates proven results is somebody who, in leadership and people who have a process to adapt to what's changing in the environment. So the reason why I'm bringing that up is because I see this every single day. If you're looking for advice, be sure you're working with people that have those characteristics, that have the experience, the expertise, the credentials, chartered financial analysts, you know, that could actually help you, and that they're structured in a way where there's independent, unbiased advice, and it's a nimble structure. Many of these really large companies, their structure is not nimble to allow investors to do well. One of the big advantages that an independent or an individual investor has is that they're smaller in size and you can be more nimble. You can own securities directly. A lot of these big firms, they'll put people in mutual funds and packaged products where those products have multiples of billions of dollars, and those managers cannot move very nimbly. They're actually moving really slow, and they can't optimize. They have to own a lot of stocks because of the liquidity, and they're not focused in on the best opportunities. So we say you could be diversified adequately, but also have great investments that have good opportunity for reward and risk management because we can be more nimble. So anyway, in order to be successful in this market, and I just did a strategy piece for Real Vision talking about this, it's really important that you are nimble, and it's really important that you have adaptability in this environment. So that's my message for today. Independent, unbiased, adaptability in your strategy, proven numbers in terms of how you work. Trust the numbers more than the narrative, and work your portfolio from that perspective and your financial planning, and I believe you'll have much better results. Llanes with WealthNet Investments signing off for now. Have a great day.